PB Taxand Tax Updates. Disclaimer: the following information is intended only to be a guide. It must not be relied on in or applied to specific situations without previously seeking proper professional advice. Tax incentives for go-public companies. A public offering is a securities offering that is carried out by an issuer to sell securities to the public based on the procedures regulated in the Capital Markets Law and its implementing regulations. Companies that make a public offering of their shares to the public are called go-public companies. Based on the data from the Indonesia Stock Exchange, or IDX, as of May 24, 2024, a total of 926 issuers have listed their shares on the IDX. There are various benefits in becoming a go-public company for both the issuers and shareholders, which includes the ability to obtain new sources of funding in large amounts, improve the company's performance and image, accelerate the implementation of good corporate governance, avoid ownership conflicts within the family, ensure business continuity, optimal valuation for the company and shareholders, as well as tax incentives. Tax incentives for issuers. The income tax rate for corporate taxpayers that has been in effect since 2020 is 22%. Domestic corporate taxpayers in the form of public companies may receive a reduced rate of 3% if they meet the following requirements. A. The total number of paid-up shares traded on the stock exchange in Indonesia is at least 40%, which must be owned by at least 300 parties. B. Each party, as intended in letter A, may only own shares of less than 5% of the total issued and fully paid shares. C. The provisions of letters A and B must be fulfilled within a minimum of 183 calendar days within one tax year. And D. A report regarding the fulfillment of requirements must be submitted to the Directorate General of Taxes as an attachment to the annual corporate income tax return for each tax year, which consists of a monthly report on the share ownership of issuers or public companies and the recapitulation from the Securities Administration Bureau, and a share ownership report of special relationship parties such as the main shareholders and controlling shareholders. The parties referred to in letters A and B above do not include the issuer who buys back shares, and or those who have a special relationship in accordance with the income tax law, which includes the main shareholders and controlling shareholders. Thus, if the above requirements are met, the issuer may enjoy a corporate income tax rate of 19%. Tax incentives on share sales for shareholders. Founding shareholders. Founding shareholders are individuals or entities whose names are registered in the Registry of Limited Liability Company Shareholders or listed in the Limited Liability Company's Articles of Association before the registration statement for the initial public offering becomes effective. The definition of founder's shares also includes shares obtained by the founder originating from the capitalization of the premium issued after the initial public offering, as well as shares originating from the founder's share split. Meanwhile, excluded from the definition of founder's shares are the following. A. Shares obtained by the founder from the distribution of stock dividends. B. Shares obtained by the founder after the initial public offering originating from the exercise of preemptive rights or rights issue, warrants, convertible bonds, and other convertible securities. And C. Shares acquired by the founder of the mutual fund company. Owners of founder shares are subject to additional final income tax of 0.5% of the value of the total founder's shares they own. The obligation to remit the tax is carried out by the issuer on behalf of each founder's share owner by no later than 1 month after the shares are traded on the stock exchange to the tax office in which the issuer is registered. Furthermore, the issuer is also required to submit a report on the payment of additional final income tax on the founder's shares to the tax office in which the issuer is registered, and the stock exchange organizer by no later than the 20th of the following month after the tax payment period. If the additional final income tax of 0.5% has been paid, then the founder's share sale on the stock exchange will only be subject to final income tax of 0.1% of the gross amount of the sale. However, based on DGT's circular letter number SE-06/PJ.4/1997, owners of founders' shares may also choose to refrain from paying additional final income tax on founders' shares of 0.5% by reporting their decision to the Director General of Taxes and the Stock Exchange Organizer. As a consequence, the capital gains from the founders' share sale will be subject to income tax according to the rates as stipulated in Article 17, Paragraph 1 of the Income Tax Law. Non-founding shareholders. The selling of shares carried out by shareholders who are not founders' share owners on the stock exchange are subject to final income tax of 0.1% of the gross amount of the sale transaction. Thank you for listening to PB Taxand Tax Updates.